So here's what's happening right now. The U.S. Central Bank is about to lower interest rates again. That's right, later today, the Fed is widely expected to cut rates by a quarter point, making it the third cut this year. They say this move is meant to help a weakening labor market. Sounds reasonable on the surface, but let's pause for a second and look at the bigger picture. This isn't just a simple interest rate tweak. What we're seeing is a central bank trying to steer a fragile economy through stormy seas, and the outlook for 2026 could be far less stable than many expect. Because behind the scenes, Wall Street is watching more than the rate cut. They're watching the Fed's dot plot. That's the quarterly roadmap where central bankers try to forecast future rate moves, inflation trends, and unemployment levels. That dot plot could tell us whether this cut is the beginning of a long easing cycle or a short, cautious step. Now think about what this means for everyday Americans. Home loans, car loans, credit cards, business loans. A rate cut might offer some breathing room, but only if the economy doesn't slip further, because wages aren't growing much anymore. Recent data shows worker compensation growth hit its slowest pace in 4 years. When workers aren't earning more, price relief from rate cuts may not be enough, the burden just shifts. And there's a political twist too. This could be the last time under Jerome Powell that the Fed's leadership looks normal. Powell's term ends in May, but President Donald Trump has already signaled he wants to name a successor early, which means most of 2026 could operate under a shadow chairman. That uncertainty alone could rattle markets and derail stability. So what's really at stake here isn't just whether rates go down, it's whether we're entering a period of economic whiplash. Because if inflation returns or the labor market deteriorates further, that rate cut could become the first domino in a chain of hard decisions. For investors, it's about timing and risk. For workers and families, it's about survival and planning. For America, it might be about trust, credibility, and whether the financial system can hold together under pressure. If you ask me, I think this rate cut might bring temporary relief, but unless the Fed and the government get serious about long-term fixes, real wage growth, stable jobs, inflation control, 2026 could be rough. So I want to ask you, if the Fed cuts rates today, do you feel it'll help your paycheck or just delay the pain? Type yes or no in comments and tell me why. Stay tuned, because whatever happens next, we're all riding the wave together.